Good afternoon, everybody. I am delighted to welcome you to today's webinar on the opportunities and challenges of exporting to China. My name is William Barnes-Graham, and I am the Digital Content Manager at Open to Export. We are an online community helping small UK businesses get ready to sell overseas through our step-by-step articles and guides, regular webinars, our Export Action Plan tool, and our quarterly competitions. You can find all of these on our website at www.opentoexport.com. Open to Export is powered by the Institute of Export and International Trade, the UK's only professional membership body for traders, offering a unique range of individual and business membership benefits, education and training catering for beginners through to master's degrees, and an always exciting and prestigious programme of events celebrating UK businesses' exporting achievements. We will be running a live Q&A at the end of the session, and you can ask questions at any point during this webinar using the question box on the control panel to the right-hand side of your screen. We have three great speakers today. We'll have Matthew Grandage from Chamber International giving practical tips about selling to China, including some advice around documentary requirements. We'll then have John Coates from Barclays, who will give some advice about some of the financial solutions available to help you bridge cash flow gaps and ensure payments when exporting to China. And kicking things off, we have Avi Nagel from China Britain Business Council, giving an overview of the opportunities and challenges for British businesses looking to the China market. So over to you, Avi.
Thank you, Will, and thank you all to all the listeners online for joining us this afternoon. My name is Avi Nagel. I'm a business advisor for the China Britain Business Council, an organization that works with UK companies interested in exporting and building relationships in China. I'm going to give a quick overview of the Chinese market and then go on to discuss some of the business opportunities and challenges of working there. So with over 1.4 billion people, we all know that China is the world's most populous country, and as we can see from the map, it's also one of the largest ones as well. But we often make the mistake in assuming that China is one homogeneous market without considering the great variety in taste and culture. Take language as an example. While Mandarin is the national language and taught in all schools, it's still only spoken by about 70% of the population. There are great regional differences in taste and preferences in a similar way to how we wouldn't expect a French company to localize our product for an Eastern European market. We shouldn't expect an urban elite in Shanghai to provide insight on rural inland China. With respect to the administrative way that China breaks down their government, it includes 34 units. The largest ones are the 23 provinces, which you see outlined in the map in front of you. And there are also municipal level governments like cities like Beijing and Shanghai. And there's also special administrative regions like Hong Kong and Macau. Also, China likes to think about the cities in terms of different tiers, and the tiers often relate to their importance and level of economic development. So there are 4 Tier 1 cities, which are the most economically advanced, have the most foreign businesses, and the most well-to-do consumers, and there are something like another 30 Tier 2 cities, which are typically provincial capitals or areas of very large economic development. Next slide, please. China is the second largest economy in the world at over $14 trillion, and while the growth rate has slowed somewhat over the past decade, it's still at an enviable rate of well over 6%. This impressive growth has led per capita income to a level of over $10,000 per year, which is comparable to an Eastern European economy like Romania. These macroeconomic numbers are important to sort of give an oversight, but they can be a little bit misleading because they maybe overlook the major wealth disparities that exist in the country. So for those of us that have been to Shanghai recently, we can see a city that's as modern as any that we've ever been to. But if we were to travel maybe an hour outside into the countryside, it's a totally different world, a totally different life. Maybe more importantly, it's important to look at the way that trade has increased in the past decade with China. China exports to China, I think it's about the 7th largest market for the UK, and they've increased about tenfold over the past decade. Next slide, please. I think we can break down modern or contemporary China into 3 distinct periods. There's the 1980s, 1990s, where we would consider that sort of the reform and opening up, the 2000s, and then sort of where we are today moving forward. So with reform and opening up, China gradually introduced market forces and private industry, but the main changes in the economy were really from low value manufacturing, from areas like textiles. After China was admitted to the WTO, there was a huge increase in foreign investment, and China became sort of the factory of the world. We sent a lot of outsourcing out there, and there was a huge increase in people moving from the villages into cities, while there's large changes in electricity consumption and infrastructure investment. Economic growth at this period was very much about getting China from a low-income economy to middle-income one. This increase in infrastructure investment can't last forever. There's sort of a limit to the number of new airports and new train lines that can be built. And so now China is thinking about how it's transforming from what they call to what they call a moderately prosperous society. So building an economy that's more consumption-led rather than manufacturing, they're trying to use cleaner sources of energy. They're trying to be more urban. They're trying to be more consumption-led. So you can see sort of in the pictures, I mean, it's a move from, you know, a rural migrant population to one that's more urban, a country that's more agricultural related to more high-end manufacturing, etc. Next slide, please. It's a good way of sort of seeing where China is going is looking at the key government initiatives, since they provide guidance on where the country is putting resources. So these are the four that we think are the most important ones, but there's certainly others that are out there. On the top left corner, it's the 13th five-year plan. This is where China outlines its major policy goals, and they do it in these five-year chunks. Some highlights from the current one: a move from infrastructure investment to domestic consumption, from a rural migratory workforce to more permanent urban environment. And importantly, they talk about greening the economy. I mean, we think about China as a huge polluter, and obviously they know that, and so they're thinking of ways to actively move away from coal and to try to promote what they call a cleaner, sustainable growth. You may have heard of the One Belt, One Road initiative. This is launched by President Xi about 5 years ago, and it's focused on improving and creating trade routes. They talk about the overland route, which connects us through Central Asia, and then also there's a sea route, which is sort of the former Silk Road route. The objectives, I think, are about twofold. One is about promoting growth in Western China and trying to integrate China in some of its nearby neighbors. And then the second one, I think, is to deal with some of the overcapacity of all the infrastructure investment that was been done in the last generation. There's an initiative called Made in China 2025. This is about trying to transform China from a cheap manufacturing location to a world manufacturing power. This is the idea about moving from manufacturing that's labor intensive to more advanced manufacturing. The hope is that maybe not by 2025, but by 20 years time, by 2050, we'll think of made in China in the same way that we think of made in Germany. So obviously it's going to be higher quality goods, it's going to be reliable, it's not going to be sort of disposable cheap stuff, which maybe we think about today with China. Finally, there's Internet Plus, which is the idea of integrating the web with manufacturing and business. The easiest way to think about this is the integration of the mobile internet. So Chinese consumers love shopping online. They love shopping on their mobile phones. A lot of the infrastructure of that is being supported by this initiative. Next slide, please. For most of us, we're really interested in trying to understand more about the Chinese consumer. And as I mentioned, the government is trying to move from an economy that's infrastructure-led to consumption-led. And we see this happening. Retail sales are growing at a rate that's about twice the rate of growth in the economy. You can see the McKinsey chart on the left is looking at the composition of the households that are sort of at a level that they start to have disposable income, to the point where by 2020, China's going to have about 4 times as many middle-income consumers as the U.S. And then on the right is a graphic that shows the breakdown of the different consumers by tiers. So we can see on the right, while at the top of that pyramid, there's only a couple tier 1 and tier 2 cities, it makes up more than 30 or maybe up to 40% of online sales. Next slide, please. So really, there's sort of two areas that we're looking at China in terms of the business. We're looking at it in terms of sourcing, and here we see the attitudes about China being a low-cost, low-value supplier are starting to change. It's becoming more expensive as wages are increasing. What we're focused on more is about British companies that are selling out there, and what we're finding is maybe the market isn't waiting for us in the same way that it was 10 or 20 years ago, that there's a lot of competition, and so it's not a great market for high volume or low cost goods, but it is a market where quality is respected, where if there's some type of unique selling proposition, some know-how or some technological advantage, that there's certainly a market for those goods. Next slide, please. So more specifically, an economy that's more affluent, that's more urban, that's more middle income, what are the types of goods and services that we want? We know one of the major exports to China right now is education. I know there's a number of education firms on the line. Chinese will spend more for knowing that their children have a better future, better opportunities for themselves. We see huge potential there. This is also true in travel, which is growing at about 15% a year. And then, of course, with medical, with an aging population, with a higher expectation in terms of being healthy, there's going to be a lot more money and attention on quality medical, both products and services. And then in terms of some of the goods, anything where quality and variety is really seen as being important. So we could think about that in the food and drink space or in the mother-baby space, where we know that consumers will spend a little bit more to know that the quality is there. Next slide, please. You may have heard of the three sort of large tech players in China. They're called the Bats, Baidu, Alibaba, and Tencent. They do everything, but we often think of Baidu as sort of the Google equivalent, but they are involved in such things as the equivalent of Wikipedia, and they have a very important video streaming service. Alibaba, it's something like 70% of online sales are going through one of their platforms, but it's also a huge sourcing platform. Tencent, the mobile app WeChat, has over 700 million active users. This is also a place where people can set up stores, where people can transfer money. These are companies that are not just important in terms of targeting Chinese consumers, but they can also be partners in third markets. Next slide, please. There's a number of different ways that companies choose in terms of how to go to China, ranging from establishing a local market presence to working through a Chinese distributor. The correct approach is really all about asking the right questions before we go there. So, what exactly are we planning on doing in China? Are we exporting products? Are we manufacturing there? Are we selling services? Are we selling goods? What does our supply chain look like? Do we need to hire people locally? How will we receive funds? Do we need to have staff locally? How important is it for them to build relationships with government, et cetera, et cetera? There's lots of detail that we can go into on another time, but I'll leave it there. Next slide, please. Lots of challenges in the market, ranging from cultural differences to understanding the regulatory framework. On all these things, we try to provide guidance and support. There's some technical issues that we can signpost companies to that can help with things like getting paid or setting up a website in China, or if it's maybe easier things like identifying partners and building relationships. We're really interested in having a conversation about how we can help. Next slide, please. So I'll finish with a real brief talk on what we do. For more than 60 years, we've been helping British companies do business and export into China. We have about 500 events throughout the year, ranging from large conferences to meet the buyer sessions where we bring out Chinese buyers. We've got 10 offices nationally and 13 offices in China. So if you're out there, if you're doing business out there, if you have questions about the market, we want to hear from you. We want to hear what we can help with and try to help you be successful out there. So you'll see with the final slide my contact information. I'm sure Will's going to send you the deck that's when we're done. Hope to hear from you. And with that, I'm going to pass on to Matthew of Chamber International.
Thank you, Avi, for that introduction and a great presentation. My name is Matthew Grandage, and I work for the Export Specialist Chamber International. We support businesses of all sizes through the UK, helping them develop their overseas presence and begin or increase international trading. And we help hundreds of businesses move their goods around the world every day. Next slide, please. I'm a mechanical engineer by training. Previously, I studied and worked in China for about 15 years, first in Henan province in central China, later in Sichuan. So my personal focus in work is the China region. In the global marketplace, an inquiry could come from anywhere in the world at any time. Next slide, please. Businesses quite often tell me that they made their first sale into China after an inquiry came out of the blue. And maybe some of you who are listening have had the experience of a nice windfall like that. In fact, maybe that's been the extent of your China strategy up to this point. There's a kind of a cute Chinese phrase that describes such a strategy. It's 守株待兔, which means that it's like being a hunter who is waiting next to a tree stump, hoping that a rabbit is going to run into it. And that's the extent of his hunting strategy. It's very passive. Now, if you want to go beyond such a passive strategy and actually develop China as a market for your goods or services, what's it going to take? Developing a market is very different from the 守株待兔 attitude. So I'm going to quickly list off 5 commitments that you will need to make in order to develop a place within the Chinese market for yourselves directly. They all sound basic, but their implications are far-reaching. And then after that, I'm going to point out 4 special things, special issues to watch out for. Next slide, please. So 5 commitments. The first one is a commitment to research. Research is essential before entering any new market, of course, but China's distance from the UK and its complexity and its sheer size make it a unique challenge. Imagine, as Avi has said, a country as large and as diverse as Europe, and you start to get the picture. The opportunities are great, but the cost of a failed market entry can be especially high. So quality market research for China is essential. However, of course, it's not something that your average SME or even the average market research company can really do on its own. And strangely, as a result, in my experience, some companies actually do far less advanced research when entering the Chinese market than they would when launching their products into a UK or EU market. And they get burned as a result. So don't be one of them. Next slide, please. Secondly, you must commit to register and protect your intellectual property in China and do it as early as possible. I'm sure you've heard before, China has what's called a first to file system. So that means that if somebody else begins the filing process for your name or your marks before you do, then the likelihood is that they're going to end up with the legal right to them. It's kind of first come, first served. So it doesn't matter how big you are, it's the first that counts. So make sure that you get help from an IP law specialist who has good experience in China, and we can point you towards some of those. Now is also the right time to ask, are your current names and logos suitable for China or not? And what should they be? Some English words and names, for example, my own name, Matthew Grandage, is very difficult to pronounce in Chinese. It doesn't transliterate well. Or your name or your company name may carry an unintended meaning because of its sound. So, for example, just within the last few weeks, I helped a UK engineering company whose first choice of Chinese name included the sound Li Xi, which they didn't realize sounds a little bit like a word for diarrhea, La Xi. So fortunately, they've changed it to something entirely different. Remember that your IP includes aspects that you can protect by registration, but also aspects that you can't, so-called non-registerable IP. Protecting this second type, the non-registerable stuff, means, for example, making sure that you don't share valuable information in such a way that it can be used against you, and you divide up your data so that no one person has access to too much of it. Next slide, please. Third commitment, commit to rethink your product, your delivery, and your marketing. Don't be lazy with this. In the light of your market research, you may need to make some big changes. Now, no matter how your product is viewed elsewhere in the world, don't assume that you'll get the same reception in China or in any other new market for that matter. Now, this need to rethink your product, your delivery, and your marketing can be an opportunity as well as a challenge if you play it right. China could, for instance, be an opportunity for you if you, in the UK, are kind of a budget brand, to potentially reposition your brand closer towards the top end of the market than you do in Europe, say. I know a UK producer of cleaning products who's done this very successfully, selling online in China. It's worked very well for them. Next slide, please. Fourth, a commitment of resources will be needed if you're going to tackle China well. That will include senior management time, repeated trips, research, all very costly. You may also need to pay for new packaging, testing, certifications, China-specific digital marketing, and more. Plus, there are risk factors to consider, of course, too. China has a strong infrastructure and a stable political system, but rates relatively high in terms of regulatory, political, cultural, and personnel risks. So you may have worked out what you think it's going to cost you to be there, but the risk of those estimates being wrong for the reasons I've just listed are pretty high. The full commitment of your directors, readiness to travel to China for a significant visit at least twice a year, and a dedicated budget of, well, even for a small company, I would say at least £20,000 at the absolute minimum if you're looking to develop this market. Next slide, please. Fifth, you'll need a commitment to building relationships. I often remind people China prefers to do business with trusted friends, and this has a massive implication for business strategy. So whereas in the UK, you might hear people say that they'd rather not do business with their friends because it messes friendships up. In China, it's totally the opposite. It's friendship first, and they prefer to do business with friends. Trust is a rare and precious commodity in China, and you have to earn it. And there's plenty on our website on the China pages to explain why that is and how to go about it. Western businesses often come unstuck because they don't know how to assess the level of their relationships with Chinese partners. They either overestimate, for example, because they felt they were treated like royalty during a visit, or they underestimate and they fail to live up to the expectations of the Chinese party in terms of loyalty and friendship. So unfortunately, many companies from the West also rely on a single point of contact too, because they don't appreciate the importance of the friendship. And that single point of contact, either in their own office or in the Chinese office, becomes a real weakness in terms of their business. I understand why it might happen. You might feel you don't have the resources to do it, but I think China is a culture where you especially shouldn't do that. I often use the illustration of a rope made out of multiple strands. You want to make sure that your relationship with your Chinese partners is like a multi-stranded or multi-cord rope rather than just a single piece of string, so that if one of them breaks, you've still got other parts to that relationship. So those are 5 commitments to research, register IP, rethinking, resourcing, and relationship building. They're all essential and they're always relevant. Okay, now as promised, I've chosen 4 special issues to be careful of. They're not all relevant to you necessarily, and they're in no particular order, but hopefully each one will be of relevance to some people who are listening. The first one, next slide please. Some goods require China Compulsory Certificate, or CCC, if they're to be imported. The list of these goods is long and it continues to be added to over time. It includes items as diverse as car tires, baby toys, electric kettles, condoms. The list states goods which require certification, not those that don't. So if your product is not explicitly on this list, you should be okay. And if you're still asked for a CCC, your first defense can be to explain that your product is not on the list and is clearly different from those that are. Sometimes a bit of confidence on your part and that of the importer is enough to avoid a problem developing. In marginal situations, some companies even pay for a certificate which states that the goods are CCC exempt. we can advise on this if you like. Next slide, please. Next, verifying the true identity and credentials of a Chinese company is not easy for those who are not used to doing it. It can feel a bit like detective work. Now, because of this, some businesses avoid dealing with China altogether, and others take unnecessary risks by not doing background checks, or they simply rely on something like the Alibaba gold supplier type information. I spend quite a bit of my time doing background checks on Chinese companies for clients, both exporting and sourcing. And we have a unique partnership with Intertech as well, which enables us to add further trust through site visits and inspections if you require that. Next slide, please. Another one to watch out for is that China, unusually, in China, import duty is calculated on CIF cost rather than FOB cost. Therefore, if you're importing into China, make sure that your freight costs are explicit on the invoice and they're not hidden in the unit cost. Otherwise, Chinese customs may add some freight collect cost in order to calculate duty, and therefore you're going to end up paying more duty than you otherwise needed to. Next slide, please. Finally, because time is short, last year, China's proposal to extend its requirement for export health certificates, EHCs, beyond the so-called high-risk food types, that's dairy, fruit, vegetables, meat, extended to all imported ambient foods, led to some quite frenzied negotiations, and finally to the implementation date being delayed by 12 months to the 1st of October 2018, which is fast approaching. I'm sure that many of Britain's food producers and exporters are hoping this idea is just going to go away because it would cause a lot of extra work. We're still awaiting clarification about all of this. So if you're considering exporting ambient foods to China, do keep your eyes open for updates. Those are the 4 things to watch out for. So that's all I'll say for now. Oh, my contact details, sorry, final slide, contact details here. You can get in touch direct if you like, follow us on Twitter, whatever. And now I'll hand on to John Coates from Barclays, who's going to talk about export financing.
Thank you, Matthew, and thanks for that excellent presentation. And good afternoon, everyone. I'm John Coates, as introduced. I'm a Trade Finance Director working within the Corporate and International Trade Division of Barclays. I'm delighted that you've been able to join the webinar this afternoon. So, with no further ado, in this session, I'd like to provide you with an oversight in ways in which a UK-based company can protect itself when exporting their products to somewhere like China. Now, I've provided some slides for reference, as these can be probably looked at after the webinar because they're fairly busy, but I'll touch on them as I go through this presentation. I think what's critical, however, when selling product to any overseas market such as China is the way that you're going to be paid, because that's what the whole point of it is for. So if you could just flip the slide over, please, that'd be helpful. Thanks. So if we look at this trading risk slide, it's a sort of risk ladder, and looking specifically on the left-hand side, and specifically you as the UK seller, this kind of shows that your lowest risk is clearly being paid in advance for your exports. However, conversely, your highest risk is when goods have been released on an open account arrangement against maybe negotiated credit terms in the hope that payment is going to be made to you in the future. And I suppose for obvious reasons, what's best for you as an exporter would not necessarily be best for you, for your importing customer, and vice versa. And it's kind of for this reason that I'd like to provide you with some information on the alternative trade solutions available to kind of bridge this potential impasse. 2 areas, and they're showing here. One's import letters of credit, documentary letters of credit, and the second one is documentary collections. Can you just flip the slide, please? Thanks. Okay, firstly, the documentary letter of credit is perhaps the most risk-free method of you being paid. It does involve you requesting your Chinese customer to ask their own bank to issue a letter of credit in your favour. Now, this is a bank-to-bank commitment that commits the issuing bank to pay as long as you meet all the terms of this letter of credit. And it kind of moves the payment risk from your customer to their bankers. And it is a pre-shipment guarantee of payment to you as an exporter, which is ideal. However, care must be taken to ensure that you're comfortable that you can actually meet the terms of the letter of credit that's been issued even before you start the manufacturing process. This includes kind of the latest date of shipment and the expiry date of the letter of credit itself. You can flick the slide, please. Thank you. So if your bank has got the appetite to do so, they could potentially confirm or underwrite this letter of credit, which moves the risk from not only your buyer's bank, but to your own bank within the UK. However, experience shows us that Chinese banks very rarely, if at all, request for their letters of credit to be confirmed. But confirmations can still be arranged. However, this would be on a silent basis. As such, there could be additional costs incurred to do this, and it still would require your bank to have the appetite to do so. Also, if there's a deferred term of payment built into the letter of credit, your bank could accelerate this payment as soon as you meet the terms of the letter of credit, and the issuing bank accept that you've done so. This ability to discount is subject to your bank's own appetite on the issuing bank in question. However, having this ability to discount the letter of credit does allow you access to cash not long after the documents have been accepted by the relevant banks, thus helping to improve your own company's working capital position. You can flip the slide, please. Thank you. Okay. The second less expensive method of being paid would be through the use of a documentary export collection. Documentary export collections have been around for many years and do help bridge the gap between letters of credit and open account trading, as they provide an exporter like yourselves with a degree of security on the basis that you will retain control of the goods being exported until payment has been made by your buyer's bank in China. Now, there are two ways in which a collection can be issued through your own bankers to the overseas bank. The first one is a collection that could be processed on the basis of cash against documents. It's also known as CAD, meaning that your buyer's bank will not release the shipping documents, including all the bills of lading, until payment has been made in full by your buyer. Secondly, it can be issued under what's known as a DA basis, meaning that documents are released by the overseas bank once your buyer has accepted a bill of exchange, agreeing to make a payment at a future date. Now, this bill of exchange could potentially be avalised or guaranteed by your buyer's bank, or then obliged to settle this on a predetermined future date. Once that's done, potentially your buyer's bank or indeed your own bank could again accelerate the funds contained within it, as there is a guarantee of a bank paying it after the period of time has elapsed. So as mentioned, the collection is relatively cheap and a really effective way to process your documents, which allows you as the exporter to retain control of your goods until you've been paid, or you've at least had an acknowledgement from your buyer in the form of a signed bill of exchange that payment will be made at a predetermined future date. So finally, I would suggest that this is also worth investigating the UK Export Finance website for their exporters insurance scheme, which could potentially allow you to insure against the risk of not being paid under an export contract, or not being able to recover the costs of performing the contract because of certain events which prevents its performance, leading to its termination. Now, the benefit of using UK Export Finance under this arrangement is they're likely to be able to insure on a single debtor basis, which a commercial insurance company is unlikely to do, because they tend to want a spread of risk across all your customers. However, there are some specific criteria that must be met regarding the export finance insurance scheme. These are fairly obvious, but the exporter yourselves must be carrying on business in the UK. The buyer must be carrying on business overseas. Importantly, though, the duration of the contract has to be 2 years or less, and that the contract value must have at least 20% UK content. Finally, the exporter must be able to demonstrate an inability to obtain credit insurance from the commercial market. And I think that I've used this on a number of occasions, but certainly in terms of being able to ensure on a single debtor basis, that is of significant interest. So I do hope the information I've provided to you is of use. If ever you'd like to discuss anything in greater detail, my details are on the slide. Please don't hesitate to contact me or email me. And likewise, your own bank should be able to provide guidance and advice relating to any of the trade solutions provided in this session. So with that, thank you very much for listening, and I shall now hand you back to Will. Thank you.
Great. Many thanks, John, and also to Matthew and Avi. A really great overview. Obviously, lots covered there of kind of 3 very different angles. So hopefully that's a good overview of what is a fascinating and huge market with plenty of decent tips there as well. One thing to bring up just before we go on to the Q&A is that we have also got a couple of previous webinars on the site about China, including one on e-commerce and one in IP in connection to the market, which may be worth checking out if those points are of interest. And in terms of export health certification, we are in contact with DEFRA about the idea of doing a update webinar or announcement on our site about what's going on there. And we will circulate that as and when that comes up, should it come up. Great, so we're now going to do a few questions. And the first one I'm going to ask is for Matthew, and it's around kind of finding decent kind of distributors for products out in China. Kind of what tips would you give for companies looking to find a distributor, and how would you, what advice would you give for working with distributors in China? Over to you, Matthew.
Right, thanks, William. That's a great question, and I could talk about this one for hours, but just very briefly, I think first thing to say is finding a distributor in China, it's not necessarily going to be the best thing for your product. You have to think very carefully about whether that fits for you in that market. You can go about this a number of ways. I always find you can, if you've got the help of somebody who knows what they're doing and can do the searching in Chinese, you can do quite a lot of good advanced desk research before going to China and trying to meet with people. I normally find that you can at least get down to a short list of 4 or 5 really good potential distributors without leaving your desk or before you get on the plane. You could alternatively, if you want, go to a trade fair and see which companies there are making a good show and seem to know what they're talking about. But there are so many trade fairs in China, and some of them are huge. And of course, if you're a small company, a trip out there is not a small expense. So I would always recommend getting help with doing some desk research first, which we're very happy to do for you, and I'm sure others can as well. When it comes to the relationship, it's really important to invest personal time in working with a distributor and going out to visit them, building the friendship, and seeking transparency as much as possible, which I know is a difficult thing, but I think because China is a difficult market for a lot of Western companies, they tend sometimes companies just go for the first English-speaking person that they know who's there and assume that it's all going to work out okay, and it ends up not working out okay at all. You need to safeguard, I think, and always make sure that you have options. So avoid exclusive distribution contracts. Make sure that you don't place too much intellectual property in the hands of one person, and review your arrangements constantly. Those would be my recommendations in a nutshell. Hope that helps, William.
Cool, thank you, Matthew. And pick up on one of those points around trade shows. Avi, kind of what tips would you give for companies looking at trade shows as a way of meeting distributors in China, and kind of where can companies also find out kind of what trade shows are out there in China?
Yeah, good question. First, back to Matthew's point, agree with it completely. One plug for one of the services that we do is we have a market introduction service where we can sort of do that research and make the calls from our offices in China and try to make some introductions for you when you come to market to find a good distributor. As Matthew correctly said, there are a lot of trade shows, and it's hard to know which is the one. There's often more than one. I would say ask us. I mean, if we haven't heard about it, we can ask our offices in China. The number one thing that you need to do before going to a trade show is registering your IP. If you're taking a product and exhibiting at the trade show and you haven't exhibited your IP, you're basically inviting the market to take your brand. It's not expensive, but that is a must. It can happen very quickly. Again, it's not expensive, but you need to do that. The other thing that I would say is there's a number of missions that the Department for International Trade will run to various trade shows in various sectors. In part, we partner with them to take the companies out there. So we're happy to support on that. But there are a lot of them. I mean, I would say in a nutshell is to ask a local ITA or to ask one of our staff to find out sort of the right groups, and then again to make sure that you register your IP before going out to China.
Great, thank you. And another question, possibly for you, Avi, and just in terms of kind of going a bit deeper into the sector breakdown of kind of where UK exports, kind of where the UK is kind of exporting more to China, and this is from Paul. It's particularly in connection to food and drink. So, kind of, what are the main sectors where the UK is exporting products to China, and kind of what's the breakdown within food and drink, if you can?
So education and consumer-led are some of our biggest sectors at the moment, with retail more specifically. As I mentioned, it's anything that's higher quality, higher value. Maybe it's a brand. Food and drink is very popular right now, as is the mother and baby sector. With food and drink, one needs to ask whether or not the taste is sort of appropriate for the market, and if it sort of fits the way that they eat. As an example, most Chinese households don't have ovens. So if I have a pie company and my product needs to be reheated in the oven, that's going to be a hard sell in China. But food and drink is a good one. I think the last statistic I saw showed that exports from the UK were up over 20% in that sector, and something like fourfold over the past 5 years to China in the food and drink sector. And we run a number of missions sort of in this space.
Many thanks, Avi. And this is going to be another one for Matthew. It's from Sun, and it's in connection to export controls and licenses. So I think there's a few questions here, but I think what I'm going to ask is kind of generally, how can companies find out more information about whether their products are affected by controls or licenses, and kind of where can companies find out more information about that part of exports in China?
Okay. Right, I presume we're talking about exports to China, not exports from China. In terms of finding out what the UK says about what's permitted and what's not, you just go to your normal sites for those, as you would for any other exports. But regarding China's import requirements, China divides things into three categories. You have things which are permitted, you have things which are restricted, and you have things which are prohibited. So the prohibited things are typically, and you can find all of this if you want on the China Customs website, though that is all in Chinese. It does have an English version as well, but unfortunately the English version is a very, very stripped down and quite out of date version. So you really need to go to the Chinese to know what's going on. But the prohibited side is typically toxins and wastes, and of course, been a big deal this year. China's ban on recycling plastic imports has been big news. So that's an example there. Restricted, you have things that are restricted for one of two reasons. One reason is that they are restricted because you require a special license for those things. So a Chinese importer would require a special license to import used mechanical and electronic products, for example, or substances that deplete the ozone layer in some way. And that the things that are on this list, the list is reissued every year by China Customs and by the Ministry of Commerce. So again, you have to watch out for the list and see. The second reason that sometimes things are restricted imports is that they're restricted under a tariff rate quota. So these are typically commodities like corn, rice, sugar, wool, fuels. Those would fall under this kind of quota type of restriction. And if you're going to work with a company over there, especially if they're claiming that they could be your distributor or your agent or something, you really need to make sure that they have got the right to do this. The third type, so is the permitted ones, and these are the majority of goods. These are the ones where when a company in China applies for a license to import, the license will be granted automatically. Now, just an extra thing to watch out for, though, is that Chinese companies, when they're set up, have to have a defined scope of work, a scope of business. And this scope of business is very strictly controlled. It's very unlike what we're used to here. When you set your business up and you register it, you have to say what that company is going to do, and then you'll get permission to do that. And if a company out there has not put in, we're going to be an importing company, if they haven't put that into their scope of work, then that's going to cause problems further down the line. So if you were to set up your own business in China, say a wholly foreign-owned enterprise, working on your behalf, importing goods and then selling them into the Chinese market, you need to make sure that you've got your scope of work right, as well as knowing how to go about applying for import licenses. Back to you, William. I hope that's about as much as I can fit into a couple of.
No, that's terrific. Thank you, Matthew. And if there's any further questions on that, we can always take that sort of thing offline after. A question which might be for John, and this is around working capital, and it's something you touched upon, but it's kind of, can you go a bit deeper into the working capital support which is out there for companies looking to sell into China?
Well, yeah, thanks, Will. Yeah, it's a good question, because bottom line here is that companies are keen to be able to fulfill contracts that they want to complete, and cash is always king. And clearly, approaching their own bank for facilities can be a bit daunting. UK Export Finance certainly have been looking to step up their game in terms of support available to SMEs across the UK, and very much around the working capital scheme. Certainly in the last sort of 2 or 3 months, there's been some major changes to make that certainly easier to access and more user-friendly. I suppose in terms of what does it do, first of all, it's when banks need collateral to support working capital facilities, which clearly basically means that they need their facilities secured in one shape or another. And business owners and companies, either the balance sheet isn't strong enough or they just haven't got the assets to support. This is where the government steps in and potentially can provide a guarantee directly to that bank for maybe up to 80% of the value of the facility required. There's always a debate over the remaining 20%, which is probably known as the bank's skin in the game, and that's subject to discussion between the bank manager and the business. But clearly, in terms of 80% guarantee from the UK government, that's regarded as first-rate security as far as the bank is concerned. And certainly in terms of that kind of structure, the facilities now being opened up allow a company to, first of all, be able to have access to it as long as they're based in the UK, as long as they're selling to an overseas buyer and there's a contract of securing facilities up to any amount. It doesn't really matter. It's all dependent on the credit application and the business case itself. What they have done in the last few months is new master agreements have been signed by all the major banks. which actually allows the banks to self-delegate. What that basically means is that banks, providing a certain level of criteria can be met by the individual bank with the individual company, it automatically means that that guarantee can be taken up. What that does mean is that there isn't a requirement to fill in copious amounts of application forms and put it through the UK government's underwriters. That responsibility sits with your own bank, which is good because it actually speeds up under that self-delegation process. The other really interesting change in the last few months is also to enable a manufacturer of product who is selling to a UK exporter to also have access to that scheme, providing it can be proven that what they are producing within the UK is actually being exported. Again, that's sort of subject to sort of case-by-case due diligence, but it's an interesting point. So if you are in the UK and you are manufacturing, but you are selling to a UK exporter, it does open up those facilities to you and can be applied in the same way as well. So it's a quite interesting development around that. One of the sticking points at the moment, which is being looked at, is this having a contract in place. What denotes a contract? Is it one piece of paper? Is it war and peace? Not really sure, but obviously there has to be some kind of agreement between parties which suits UK Export Finance, that there is some kind of commitment under that contract arrangement to export. So that's just one thing to look out for. That's about it from me, William. Can I hand back to you now?
Yeah, absolutely. And we've had a question which has just come through, actually picking up on one of the points around due diligence. I think I might put this to Avi first. It's from Natalie. It's kind of, where do you go to be able to do due diligence checks on Chinese companies? And so what kind of resources or support is there for doing that? Avi?
The first place to check would be an organization called ACSIC. China's very much a land of acronyms, so it's AQSIQ, which is the General Administration for Quality, Supervision, Inspection, and Quarantine. And as Matthew alluded to a couple moments ago, that's the organization that holds the business license for companies. And so, if you check with ACSIC, you can see whether or not the company is real, where they're registered, what they're registered to do, and what the capital is that they have invested in that company. This will give you sort of very rudimentary information to tell you if the company is real or not, and if they're actually in the business that they say they are. We can run that check for you. You can see on our website or shoot me an email after. For most companies, you really need to start talking to some of their other people in the supply chain or some of their customers. I mean, any Chinese distributor that can't give you other examples of foreign brands that they're working with, that can make introductions to you to people in the supply chain, those are companies to be a little bit wary about. And then, of course, there's a whole network of consulting third-party providers that can ask some questions and try to do some DD on your behalf.
Thank you. And a question we've just had in from Danny, which I'm going to put to Matthew. It's a company who's currently growing their business with China, and one company is wanting to register their name and logo. But from what's been said today, that doesn't sound like a great idea. Is that correct? And would the company be able to register themselves easily enough? So over to you, Matthew.
Yes, William, that would not be a good idea. You're absolutely right. And it's not unusual that this happens. I remember dealing with a company at the end of last year whose new agent, and again, I mean a kind of a distributor agent, so not an employee, but somebody who was just buying in and reselling, had said to the UK supplier, look, you need to have a website here. You need to have your logo needs to be registered, and so on. Let me do it for you. And I don't think there was any kind of bad intent there particularly, but fortunately, I met with the UK company just after they'd been asked this question. I said to them, no, absolutely don't do it, because even though it might work well for you in the short term, at some point you're going to get into a tussle with your with that distributor. and you don't want these kind of precious things to be in their hands, not yours. So yeah, is it easy for you to do yourself? It's easy for you to do from the UK using a suitably China experienced, IP experienced law firm, and it's not expensive. The process from start to finish, I mean, to the time when the mark is actually awarded, will be more than a year, but it's not massively costly, as long as you don't have too many marks that you're trying to register. So yeah, if the person who's asking the question wants any advice about people that might be able to do that, they could contact this webinar, and I can make some suggestions there if they like.
Great stuff. And I think Avi might have a point to add to that quickly.
To follow on Matthew's point, I mean, registering the IP is really not that expensive. There's agents or law firms that can do that, but once that company has that IP, they own it forever, and so at some point you'll likely have to buy it back from them, and then that's a negotiation that is going to be a little bit difficult. So why give them that power?
Cool, thank you. I think on that note, we're starting to run out of time, so I'm going to wrap up there and say thank you once again to Avi, Matthew, and John. So much information there, so thank you all three of you for speaking today, and for all of that advice. Thank you. So yeah, now to wrap up. On the Institute of Export side of things, our next regional trade summit is going to be in Bristol, as a lineup of trade experts and case study exporters share their insights into how UK businesses can sketch their roadmap to export success. Please go to export.org.uk/events to find registration details for that. And if you're looking to gain the skills and knowledge to help your business do exporting properly and successfully, do have a look at our suite of qualifications. Our qualifications are designed to give individuals and businesses the skills needed to export successfully and compliantly. You can find details about all of our qualifications on export.org.uk/qualifications. We are really delighted to have recently launched our first ever international competition, the Open to Export International Business Awards, which we are running with the support of the World Trade Organization and the International Chamber of Commerce as part of their Small Business Champions initiative this summer. They are a great chance for companies from all over the world to win $5,000 towards their export action plans. And the final will be taking place in Geneva in October as part of the WTO's public forum, which will itself be a great chance to meet business leaders, government officials, journalists, and various from the glitterati of world trade. So definitely have a look at what could be a really great opportunity for your business, wherever you are in the world. More information can be found at opentoexport.com/international-business-awards. And our next webinar will indeed give you tips on how to enter that competition on July 3rd, with practical advice from Leslie Batchelor and Arnie Milken from the Institute, and also some tips from previous UK winner, the Great British Baby Company. Then after that, we're back looking beyond the EU as we look to Australia for the first time on July 10th with Shelton's group. So that should be an interesting webinar if you're interested in the Australian market. You can find sign-up details for all of our future webinars at opentoexport.com/webinars, and we'll be circulating the links for those two upcoming ones later on this week. As always, please do take our exit survey to let us know what you thought of today's webinar and to give us any suggestions for improvements or future topics. We will be recording this webinar and sharing it on YouTube afterwards in case you want to have a look back at what was mentioned. And please do get in touch if you have any further questions. But many thanks and goodbye.